If you invest in Australia, trade with Australia, or depend on commodities priced in Australian dollars, here is the reality. Australia's geopolitical posture is tightening, and that tightening is changing how capital, trade, and strategic risk are being priced. This is not about headlines. It is about alignment, and alignment has consequences. The quiet shift from middle power to strategic node. For decades, Australia operated as a confident middle power, economically open, strategically Western, commercially pragmatic with Asia. That balance is harder to maintain now. The Indo-Pacific is no longer a neutral trade corridor, it is a competitive strategic theater. Shipping lanes, undersea cables, rare earth supply chains, and defense corridors now carry political weight. Australia sits in the middle of that map. Geography used to be an advantage. Now it is responsibility. Alliance depth is increasing. Australia's defense coordination with allies has moved beyond symbolism. Joint exercises, intelligence integration, advanced submarine planning, and defense industrial cooperation are expanding in scope and seriousness. This is not temporary coordination. It is structural alignment. And structural alignment reduces strategic flexibility. When commitments deepen, markets notice that before voters do. The economic layer. Trade under scrutiny. Australia's economy remains deeply tied to export flows, particularly minerals, energy, and agricultural products. But trade is no longer purely commercial. Export controls are spreading globally. Technology transfer restrictions are expanding. Critical infrastructure screening is tighter. Foreign investment approvals face more scrutiny. That changes capital behavior. Investors now ask, trade relationships that once looked stable are now evaluated through a security lens. That increases friction. The critical minerals leverage. Australia is one of the world's most important suppliers of critical minerals, lithium, rare earths, and other inputs essential for batteries, defense systems, and advanced manufacturing. That gives Australia leverage, but leverage cuts both ways. Flows into mining and processing are accelerating, but so is scrutiny. Australia is transitioning from being a supplier to being a strategic supplier. That changes the risk premium. Energy and the strategic transition. Energy is another geopolitical layer. Liquefied natural gas exports, transition minerals, and renewable capacity investments are being woven into diplomatic relationships. Energy is no longer just revenue, it is influence. But influence invites counter-pressure. As the global energy transition accelerates unevenly, Australia must balance. That balance is not simple. The China factor without drama. Australia's largest trading partner remains China. At the same time, its security alignment is firmly Western. This duality requires constant calibration. Trade disputes in previous years demonstrated how quickly economic channels can become political. Even when tensions ease, the structural lesson remains. Australia is now actively diversifying trade relationships, not just for growth, but for resilience. Resilience costs more than efficiency. Markets price that. Domestic implications, defense, debt, and budget pressure. Strategic commitments are not abstract. They require funding. Defense budgets are rising. Infrastructure resilience costs are increasing. Strategic industry subsidies are expanding. Fiscal space is not infinite as spending priorities shift. This is not crisis spending, it is long-horizon repositioning. But repositioning requires sustained political consensus, and that is never guaranteed. Currency sensitivity and capital flow. The Australian dollar has always been sensitive to global risk appetite and commodity cycles. Now there is an added layer, strategic exposure. When geopolitical risk rises, Australia remains attractive. Rule of law, stable institutions, resource wealth. But attractiveness now includes strategic risk analysis, not just growth projections. The Indo-Pacific is not stabilizing. Regional naval presence is increasing. Military modernization is accelerating. Strategic competition is intensifying across technology and infrastructure domains. Australia's role in this environment is not optional, it is embedded. Being embedded provides security assurances, but also obligations. Obligations reduce optionality. The strategic trade-off. Here is the core tension. Australia benefits from openness. Geopolitics rewards alignment. Openness thrives on flexibility. Alignment demands commitment. The country is managing both, but the margin for balancing them is narrower than it was a decade ago. This is not visible in daily headlines. It is visible in long-term capital allocation. What markets are really watching? Markets are not looking for dramatic escalation. They are watching. In other words, markets are watching whether Australia can deepen alignment without triggering economic instability. The long-term view Australia is not in crisis, it is in repositioning. Repositioning takes time. It also changes risk models. Investors who treat Australia as purely a commodity exporter are outdated. Investors who treat it as purely a strategic outpost are incomplete. The truth lies in the intersection. Australia is becoming a strategic economic node in a competitive region. That increases its importance. It also increases its exposure. The geopolitical shift facing Australia is not about confrontation. It is about commitment. Commitment reshapes trade. Commitment reshapes capital. Commitment reshapes expectations. And expectations move markets before policy statements do.